In this video, how non-US taxpayers, like you Canadians, Europeans, Latinos, basically any non-American, how you can legally slash your tax bill to zero. No offshore schemes, no shady loopholes, just smart relocation to places where foreign income isn't touched. By the end of this video, you'll know exactly where to go, the top hotspots, how to do it right, and the one big mistake that trips everybody up. So let's jump in. Understanding tax residency. Unlike US citizens who get hit with worldwide taxation, no matter where they live, most countries, including the UK, EU nations, Canada, Australia, and Latin America, tax based on residency, not citizenship. Your tax home is where you live, work, and your center of life is a concept here. So if you're a tax resident in the UK right now, HMRC taxes your global income. Canadians, you're taxed on your global income as a tax resident of Canada. But moving your residency to a zero tax spot or a territorial tax country, and poof, your foreign earnings, think dividends, freelance gigs, investments from abroad, become untouchable. No reporting, no audits, just more money in your pocket. The OECD and tax treaties globally define residency by factors like spending 183 plus days, so 6 months in a year or more, having your main home there or your economic center of interest. Get it official with a residency permit and a tax certificate, and you're golden. But here's the key. It has to be real. Faking it or, claiming residency while jetting back home most of the year, that's not going to cut it. That's where most people get nailed. More on that later. Let's break it down into two main paths: pure zero tax jurisdictions and territorial tax system. I'll hit the best options for 2026 based on current laws with real steps to establish residency. These are places where expats are flocking right now, stable and visa-friendly for non-US folks. So path one is zero personal income tax countries, where your income truly stays 100% yours. There's not too many of these countries, and these gems don't tax personal income at all. Zero rates, zero brackets, nada. They're perfect if you want simplicity. You're literally paying zero tax, zero paperwork, nothing to file locally on any of your earnings. To not have to file a return at all is just such a stress reliever. As of 2025, there are about 17 such countries, but I'll focus on the most accessible for Brits, Europeans, etc. So ones with easy visas and a high quality of life, that's kind of the balance you're looking for. So expect to invest time and potentially pay a little bit of cash up front, but the payoff is massive. So let's start with Monaco. This tiny Riviera powerhouse is tax-free on personal income, capital gains, and inheritance for residents. No wealth tax either. It's very elite. You have the glamour, yachts, F1 races, but open to anyone with means. You'll establish tax residency there. You'll secure a residency permit or a carte de séjour. You'll rent or buy property at a minimum million or 2 million euros for purchase, but rentals can qualify as well. You'll need a clean criminal record and health insurance. The next step is to deposit 500,000 euros in a Monaco bank account as proof of solvency. It's frozen for a year or more. You're going to want to keep the money there, but it earns interest. Next step, spend at least 183 days a year in Monaco. Your central of vital interests must shift. Move your family, the kids' schools, your utilities, banking, everything, your club memberships, move everything over to Monaco. And once approved in 3 to 6 months, potentially, you can apply for a tax residence certificate from the Monaco tax authorities. And the bonus is there's zero tax on your UK dividends or your EU freelance income. EU citizens get Schengen access, Brits need a visa, but it's straightforward post-Brexit. Next up, St. Kitts and Nevis, Caribbean paradise with zero personal income tax, no capital gains, and no wealth tax. It's a citizenship by investment hotspot, has been for almost 40 years, but you don't need to buy in for residency. As a tax resident, if you just spend 183 days plus per year there, your foreign income vanishes from tax radars. As long as you do things legally, of course. But it's a zero tax country, one of the few. Not everybody willing to spend time there, but it can be done. So here are the steps. You enter on a tourist visa, up to 6 months for most nationalities. Apply for residency via the permanent resident program. Invest $150K in real estate or donate. You can then rent a place, prove your ties, local bank account, utilities in your name. The question is, does a permanent residency at 150K investment make sense when you can get citizenship for 250K? So that's why you don't hear much about residency options in St. Kitts, but it's out there. I'm sure it changes all the time, but every country has residency programs as well. So you'll hit your 183 days there and get a tax residency stamp from Inland Revenue. So why there? You have the beach, it's English speaking. You have Nevis as a major center of trusts for asset protection, so a asset protection hotspot, and a decent passport, better than you'd expect, around 150 countries, visa-free. So close proximity, you're in the Americas. Next up, with the next major theme here, the second path is territorial tax countries, where tax exists, but not on foreign income. So this is more practical for most. It's a larger list of livable countries, and these are countries that only tax local earning. Your salary from a Canadian client or US investments or EU dividends would be zero local tax. Your crypto, zero tax locally because it's all held abroad and the activity is occurring abroad. The top pick here is Panama. It's been a territorial tax system since forever. It's written into the Constitution that it's territorial, where you're only taxed on Panamanian source income, which does have tax. If you're running a gas station or a restaurant in the country, there's taxes on that, but foreign income is exempt and generally no reporting, right? So you can establish residency in Panama. You can do the Friendly Nations visa. You can do the investor visa by investing 250K plus. That's the QIRP program. We have another video on our channel about that, and more videos to come soon because it's a very interesting program. But you can invest, or you can do Friendly Nations visas. We can do them all. You'll get residency, temporary residency, or permanent residency as an investor, or potentially other visa paths like by giving birth in the country. And then you'll get the cedula in a month or two. You can open bank accounts with that, get a driver's license, and then you'll want to start spending 183 days plus per year in Panama. Make it your center of life, local address, banks, utilities, maybe buy some property, get a tax residency certificate from DGI, which is the tax authority that confirms it. There's no exit tax from home countries, ideally, and so you can just make a smooth transition into Panama and start living in a world where you're not taxed on your foreign sourced income. Paraguay is becoming increasingly popular there as well. In Paraguay, you have a 10% flat tax on local income only. Foreign income, 0% tax, no ifs, ands, or buts. It's revolutionary. It's attracting digital nomads en masse, super popular. Paraguay and Panama being two of the most tax-friendly territorial tax countries and very livable as well. So that's where most people are going right now. You can work towards permanent residency. You can potentially work towards citizenship as well in these countries, especially via the investor visa. Now, a third country I'll hit you with after Panama and Paraguay is the Dominican Republic. It's a territorial tax system as well. Only local income is taxed. You can work towards citizenship there. They have investor visas. If you can invest 200K plus in the country, you can potentially have a 6-month path to citizenship. We have other videos on our channel about this idea. Or you can do a normal rentista pensionado visa by showing passive income, and you can get residency in the Dominican Republic. And if you start passing time there, you can work towards tax residency and eventually citizenship. So Costa Rica and Uruguay would be the runners-up after Paraguay and Panama. I think for people looking for territorial tax countries, you just have so many options in Latin America that can also work. You do have El Salvador, which is very tax friendly. People debate if El Salvador truly is a territorial tax system. They do have a lot of tax breaks for foreigners and also for highly skilled professionals. They have these like engineer tax credits and things like that. The jury's out on El Salvador, whether it's a true territorial tax country, but every other country in the region where you have Belize, Guatemala, Nicaragua, Honduras, Costa Rica, Panama, these are all territorial tax countries, and they're competing with each other as well, which is a really interesting dynamic where you have 6, 7 countries side by side that all have very similar offerings, similar climates, the tropical coffee mountain vibe. It's great. It's amazing. And so how do they compete? I mean, they all have territorial tax systems for the most part, which is really underrated in our opinion. So if you're ready to pull the trigger, here is the 2026 roadmap for non-US taxpayers to get to a zero tax status. And this works across everything we've mentioned above. So step 1 is audit your ties. Before applying or as you apply, start thinking about severing your home connections. You can sell or rent out your property. You can close local bank accounts in your home country, reduce your financial profile, and redirect things to your new country of residence. You can move your family, your kids' schools, your doctor records. The next step is the visa and permit hunt. It is a process. It's a hunt. 6 to 12 months. Getting one or multiple residencies in Latin America or in some of these low tax jurisdictions, you'll want to start working towards that 183 days per year minimum in that country to solidify that tax residency. And once you're settled, open a local bank account, multiple local bank accounts, get credit cards if you can to start building credit in that country. Get a phone in your name. Get the utilities of the rental contract or property that you own. Get those utilities in your name so that you have that proof of a legal residency that you can use for compliance documents, because you really need an address with all these bank accounts. So you'll lock it in officially. You can apply for a tax residency certificate, which might cost $100 to $1,000 depending on the country. It could take a few weeks. And with this certificate, this is your golden ticket, and you can share it with your old tax authorities if required. And that's going to help you leave their old school tax system and get to this friendly zero tax or territorial tax system. You'll do a formal home country exit. You'll file a final tax return declaring non-residency. Some countries have exit tax, especially on unrealized gains. So you're going to want to start planning this 1 to 2 years ahead. The timeline, this is going to be a 3 to 6 month project. These things do take time. You need to collect documents, make the application, and then wait for your application to get accepted. And then only after it's accepted, you can start building more of an identity in the country in getting bank accounts, getting a tax ID, and so forth. You have to wait till you get accepted before you can put these plans in motion. So the earlier that you get started, the better. Just make sure to hire a lawyer. They know all the tips and tricks to make the process happen as quickly as possible. You don't want to do these things alone. It doesn't cost that much to hire a lawyer for most of these processes, and they really know how to accelerate things. Final tip here, watch OECD pressure. The UAE added a 9% corporate tax recently, but personal stays at 0. So these countries are always adding new taxes, and that's why it's important to have multiple residencies in different territorial tax countries, so that if you need to be adaptable in terms of the jurisdiction where you reside, you have multiple residencies and have that optionality. And I guarantee you'll be able to make use of it one way or another. So we always advocate multiple residencies, but probably the most important takeaway from this video is if you really want to solidify it, you need to spend the majority of the year in that zero tax or territorial tax country to really reap all the benefits. And so there's really no guessing games about where you are a tax resident. That's the best way to do it. And if you can live in any of the 25, 30 countries that are zero tax or territorial tax, it's probably even more than that, you're going to have a potentially zero tax lifestyle where your hard-earned income is 100% yours. We'll wrap it up there. Please subscribe to the channel, like the video if you found this useful, and we'll see you in the next video.